What a wild day in the stock market we are seeing today. This is going to make tomorrow's earnings much more important. So we have a lot to talk about. What is happening with Facebook? Facebook is driving up the rest of the markets quite substantially here in after hours. So we're going to talk about Facebook. We're going to talk about tomorrow, what to expect. We do have economic data as well as even more important earnings than what we're getting right now with Facebook. But Facebook is up about 15%. So I never thought I'd say this, but maybe Facebook saved the stock market. Now, I wouldn't get too far ahead of myself there. I wouldn't draw any conclusions based off of what we were seeing. We got the earnings call to contend with, and we have much bigger earnings tomorrow. So we're going to talk about all of those things. AMC stock was up about 2.26% on the day, down 0.25% here in after hours. Again, I would not draw any conclusions based off of what we were seeing. A lot of this market pump, this 0.59% move we were seeing in after hours, is due to Facebook earnings. So we have a lot to talk about here in this video. I don't want to waste any of your time. After all, your time is your most precious asset. Hit the like button, subscribe to the channel, do what you guys got to do. Source your comments, questions, or concerns down below in the comment section. Come join us on the live stream in between 10 and 11 p.m. Eastern Standard Time tonight. We will be live to talk about all of this information. If you guys want to come trade with us live in real time, link down below in the pinned comment for that as well. So diving straight into this video, I first off want to start with Facebook because that is what is dominating headlines. The stock is up almost 15% here in after hours, and earnings were not actually that great. But here's the article from CNBC. It says Facebook shares spike on better than expected quarterly earnings. The key points: Meta's earnings per share for the first quarter topped analyst estimates. Revenue came in below expectations, as did the company's forecast for the second quarter. So Facebook guided down, and their revenue came in below what analysts expected for Q1. It says as of Wednesday's close, the stock was down almost 50% for the year. Now, this is the real confusing part, and this is not so good in my personal opinion. It says monthly active users, 2.94 billion versus 2.97 billion expected. So 300 million less monthly active users for Q1. That's a substantial amount. That's like all of the American population, or close to all of the American population for context there, that is now no longer using Facebook on a monthly basis. But daily active users did beat estimates by about 100 million. That came in at 1.96 billion versus 1.95 billion expected. So it was a little bit of a mixed bag. EPS did beat by quite a bit, and that came in at $2.72 per share versus the $2.56 that was expected. Now, they also did cap the amount that they are going to spend on Meta, on the metaverse, at about $2 billion per month, but they still expect to lose about $2 billion per quarter on the metaverse. So I think that's what investors really like the most out of this, is that they said they're going to cap how much they are going to spend. They're not going to drive the business into the ground to make the metaverse work. I think that was one of the biggest fears that the markets had about Facebook is, are they going to spend 10 billion a year or 30 billion a year to try to make the metaverse work, even if it's not going to? It kind of shows that the company will pivot if what they are doing does not work. But we will wait to see what happens with the earnings call to get that final move up, or if we do come back down, and that's going to dramatically affect the markets for tomorrow. You can see we are up in after hours 0.59%, and yeah, Facebook did pretty good. As far as AMC, like I said, up 2.26% on the day. You did have some other earnings. Teladoc is down 32.74%. Obviously, Teladoc does not move the markets, but that is another Cathie Wood stock that got absolutely destroyed here in after hours. PayPal guided down again, but they are still up 3.21%. I think it goes to show that after these stocks have fallen so much, it doesn't take a whole lot to rally them. Like in a normal market where Facebook had not already collapsed before earnings, I don't think these earnings would have made the stock pop 15%, right? So just be mindful of that, be vigilant of that as you guys are trading some of these earnings catalysts. Definitely a lot of money to be made when you are trading them, but still just be careful. Now, as far as the economic data that does come out tomorrow, you actually do have GDP numbers that come out at 8:30 in the morning. That's going to be the big thing that everybody is paying attention to. And then you do have some major earnings as well. We'll go ahead and pull it up. Earnings Whisper is where I get the earnings as well. They put it all in this nice little picture. You guys can watch these for yourselves. There's going to be a lot of these coming out every single week for the next couple of weeks. But a lot of the large caps are already reporting, and what we're seeing so far is not too bad. Microsoft was pretty good. Google, not so much. Facebook, I guess if you want to call it, pretty good. And PayPal, not so good. But the stocks are going up for Microsoft, Facebook, and PayPal. So we are 3 out of 4 for stocks that are actually rallying on earnings. Now, tomorrow we do have McDonald's, MasterCard, Domino's. That's a very interesting one. Southwest Airlines, Caterpillar, and Twitter in the morning. Twitter won't matter because they have the buyout. Twitter's earnings are really a sideshow comparatively to the buyout. And then Thursday and after hours, you do have Apple and then Amazon. Those are going to be the keys. If Apple and Amazon can do well and actually go up, then I don't think the crash is coming just yet. Now, if they can't, for whatever reason, they drop massively, then it's going to bring down all of these stocks. And it's not even going to matter what happened with Facebook or any of these other earnings winners. It's going to bring down the whole entire markets, because after all, that's about 10% of the S&P and about 15% of the NASDAQ just controlled in Apple and Amazon. And I think these two, they have a lot of inflationary cost pressures from commodities. So I'll be very interested to see how that does play into their earnings. Some pretty high expectations for Amazon and Apple as well. So those are going to be the main keys. After tomorrow's after hours move, that's pretty much going to confirm, are we going to head down lower or are we going to rip up higher? Now, we do still have the Fed next week. And that is 1 week, 18 hours and 20 minutes away. That is May 4th at 2 p.m. I believe that is a Wednesday. We will go ahead and confirm this right now. Yes, that is Wednesday. And the Fed is expected to raise by about 0.5%. I don't know if the markets are fully expecting it, though, because they think the Fed is kind of all talk, no bite, right? Or all bark, no bite. Is that how the saying goes? I don't know. But those are going to be the main things. If the Fed doesn't move as aggressively, then you're really going to see a major rally back up to really, really high levels. And there we go again. Facebook is making another rally 10 minutes until the earnings call actually does come out at 5 p.m. And that's where you're going to see that move, in my opinion, either to 210 or back down to about 200 or even the 195 range. And that is obviously pushing the markets a lot right now, up 0.76%. So if Facebook's earnings call is good, if these other companies maybe can come up just a little bit, that would definitely help stabilize the markets and get a real confirmed rally. Now, as far as AMC stock, we've seen some big runners today, and I do want to point this out to you guys. Beyond, I might actually make a separate video on this because I think it shows a lot, but Beyond has a very high short interest. There was a news piece that came out today that ended up getting kind of rebuffed. Like, basically McDonald's came out and said that the Beyond burger will stay on the menu, it'll be a permanent item, and then they came out and said that was not the right phrasing, that it's just a staple on their menu. Like, weird wording right there. So that's why you've seen the big rally. This thing got halted, and then it peaked out. This thing was up like 35%, and then came straight back down, got halted on the downside, straight down, and then popped back up once McDonald's made that second statement. But I think this goes to show the explosive rallies that we can see when there is actual fundamental catalyst for a stock, and specifically like AMC. When we get the next fundamental catalyst, I think you could see something like this with AMC stock, because after all, Beyond Meat does have a very high short interest comparable to something like AMC, and you were seeing a short squeeze at a certain point of the day today. So I think that does go to show a lot. Now let's take a look at the Ortex data for AMC. And we can see, let's go ahead and take a look at the short interest first, and then we'll talk about the option activity. So it says 18.83% short interest of free float as far as April 14th. So not too long ago, the sentiment day for this short interest reading was at 19.35%. So very high. It's saying the short interest is going down, and that's obviously not the case in my personal opinion. I don't think shorts are taking this time to cover on their short positions. I don't even think that's a logical thing to be saying right now. And the exchange reported short interest does not really reflect that at all. The cost to borrow max is sitting at 2.73%, utilization at 100%, and days to cover at 2.44. So still prime for a short squeeze, but we do need to see a catalyst. If we don't see a catalyst, if just no news comes out, then I don't expect, if the markets crash, then we'll just magically start to squeeze. You need to see the markets crashing or coming down, liquidity drying up, and then you need to see a catalyst at the same time, which I do think will happen. I think there's plenty of catalysts right around the corner. And, I wouldn't get so worked up on that. I think this regime of lower liquidity levels is here to stay, especially as the Fed does continue to put the brakes on the economy and ultimately, more than likely, push us into a recession. So I think really from like now until like the end of this year, you're really primed to see the MOAS. We have really good conditions to potentially see the MOAS. Now, the option flow sentiment for the day, 14 orders totaling $6.11 million, positive order value of 11%. So not very bullish option activity, and you are seeing a lot of calls that came through today, but AMC was actually positive, 2.26%. So I think that does go to show, just the magnitude of strength that AMC has right now. And I had somebody on the live stream saying last night, talking about like the fundamentals of AMC, and really a big reason why I like AMC and why I think it's holding up so well is because a lot of money is flowing into your travel and leisure kind of stocks, right? Like restaurant stocks or travel stocks, like the airlines have been doing pretty well here recently. And I don't think that trend is going to dissolve anytime soon. I think that's going to be a trend that is really here to stay in a substantial way for the next coming months. There's a lot of demand to travel, and I think investors are seeing that, and they're going to put their money where people are spending their money, right? Where the consumer is spending their money. And I think AMC is primed to benefit from that. So I do think we're showing a lot of strength and resiliency here at these levels, but it's really going to come down to what earnings are tomorrow for Apple and Amazon. If they butcher earnings, if either one of those stocks falls, 5 to 10%, you're going to see a treacherous market. So I wouldn't write this off as we're set to rally. I wouldn't trade based off of that. It could still go either way. Once you get Apple earnings out the way, Amazon earnings out the way, you will get a clear trajectory, and then that's where I would go a little bit heavier if I wasn't playing any of these to play that directional move. So that is pretty much going to be all as far as the actual technical levels for AMC. Nothing has changed. It's still the same. Watch the $15 level for potential support if Apple and Amazon earnings are bad for whatever reason. That's going to be an important level. Also, the 50-day moving average is at $18.45 per share. If those earnings are good, then it would not surprise me to see AMC head back to that range. The $18.50, even up to $21 per share is very possible in my personal opinion. 100-day moving average at $20.49 per share. If we can break out past those, really, that $20.50 range, then the sky is kind of the limit at that point. You really don't have any moving averages up until $29.73 per share, and that's where the next level of resistance would be. So if we can clear 21, then it looks pretty good to head close to about 30. If we do see, instability in the markets, if earnings are bad, then watch the $15 level. As far as the MACD, that is extremely bearish. The RSI, extremely bearish, signaling that we are probably due for a major bounce. So that is pretty much going to be all for this video. Watch the GDP numbers. Like I said, watch earnings, watch these key levels on AMC stock. But overall, I think we are primed to see a short squeeze when the right catalyst does come out. There's less liquidity in the markets right now than we have seen over the past year. Thank you guys for watching. Hit the like button, subscribe to the channel, do what you guys got to do in that regard. Come join us on the live stream. But until then, you guys take care. I will see you in the next one.